The global economy is flashing warning signs, and most people don't realize how close we are to a major shift. Markets are moving, interest rates remain high, and one critical decision could change everything. But here's the real question. Are we heading toward a recession or the beginning of an entirely new market cycle? Right now, global investors are watching central banks more closely than ever. Why? Because interest rates control the flow of money. When rates rise, borrowing slows down. When rates fall, markets usually explode with liquidity. And today, central banks like the Federal Reserve and the European Central Bank are walking a dangerous line, fighting inflation without breaking the global economy. Inflation has cooled from its peak, but it hasn't disappeared. At the same time, economic growth is slowing across multiple regions. This creates a powerful tension. Cut rates too early, and inflation could return stronger. Wait too long, and economies could slip into recession. This balance has not been this fragile in years. Stock markets are reacting to this uncertainty in real time. Technology stocks, in particular, are extremely sensitive to interest rates. Higher rates pressure valuations, while even the hint of rate cuts can trigger massive rallies. That's why we're seeing sharp moves, sudden pullbacks, and increasing volatility across major indexes. But stocks don't tell the whole story. Bond markets often react before equities, and right now, rising bond yields are sending a clear signal. Investors are demanding higher returns, which usually means tighter financial conditions ahead. At the same time, the US dollar remains strong, reflecting global demand for safety and stability. And when uncertainty rises, investors search for protection. Gold attracts defensive capital during times of stress, while Bitcoin is increasingly viewed by some investors as a long-term hedge against monetary instability. Both markets respond strongly to liquidity, interest rates, and confidence in the financial system. So what does all of this mean for investors right now? This is not a time for blind optimism, and it's not a time for panic. It's a time for awareness. Understanding macroeconomic trends, managing risk, and staying informed is more important now than at any point in recent years. The global economy is standing at a crossroads. The next moves by central banks could shape financial markets for years to come. And those who understand what's happening beneath the surface will be better prepared for what comes next. If you want clear, simple explanations of the most important financial forces shaping the world right now, follow the channel and stay ahead of the markets.